Hey everyone, Happy New Year. I thought I would do something a little different this year and include a video explaining my findings in the monthly market report. So first let's go into interest rates. So interest rates this month, they've dropped 2 months in a row, and they're even lower now than they were at the time that for December. So they're at about 6.6. We did not see a significant uptick in market activity, and I think a lot of that has to do with just the holidays. The rates started dropping right around the time that people kind of nestle in for the holidays, and then people get started again in winter spring timeframe. Next up, let's look at pricing. Pricing has gone down a few months in a row now. I anticipate this is going to change. We are actually below the 12-month rolling average, as you can see here. But I think that this is going to be a quick correction to the upside with a lack of inventory and the lower interest rates. In looking at multiple offer situations, again, this is for December, you can see that most areas are milling around the same levels as prior months, with the exception of the $2 million level. There was only 2 sales though. So I maintain what I say about the $2 million market and the upper end market, that most of the stuff comes on, sits, doesn't sell, or takes 6 months to sell, and the stuff that's really good comes on and sells in a multiple offer situation. One of the reasons why this report is so late this month is because this is an entirely new sheet that I wrote this month, looking at the inventory and what's actually happening to it. So as you can see, from November to December, we dropped 2295 homes for sale for December. Now these bars, by the way, this is current, this is last year, and this is the 5-year average. So just to kind of give you an idea of what's trending for those different times. So inventory is down, but so what? What does that mean? And that's where I try to kind of provide some context, and that's what these graphs, these very simple graphs, have a lot of data that is driving them. But basically, this is looking at the number of listings, and then this is the number of new listings that's happening for the month. And as you can see, over a 5-year history, on average, we're seeing 61% of the listings being new for the overall inventory, and this year we're only seeing 31%. But when you look at actual, current comparisons, we're down from 35 to 31, so we just had less listings come on the market in December than is customary, but we are up from December 2022. The last is what's happening to the listings that's on the market, right? So we have 2295 for sale. Well, we got contracts on 28% of them. So that was actually up from November, which when we got 24%. Now, November had much higher homes on market, but this is a compression and should actually create some upward pressure. Again, we're still well off the 5-year averages of 55%. Days on market, you can see from here to here, days on market has been quite a bit above, and with the interest rates dropping, I anticipate that this is going to drop. Looking at this is the current month, it was I think 51 days. We're above the quarterly average, and you can see that the mid-range is the one that's mostly sitting above average days on market, because that stuff is actually selling. Remember, this is only days on market for stuff that's actually selling. It's not for stuff that's sitting here. So the mid-range stuff is stuff where people probably have unrealistic expectations of what their home is worth, but then it eventually sells with price drops, etc. The low end is still pretty aggressive in terms of average days on market. And again, the high end, over here, you're not seeing high days on market because that stuff's sitting, it's not actually selling. And last but not least, we have people per home for sale. I'm going to actually get rid of this one. It's going up slightly. I just don't find it provides enough interesting information. But where the market currently is, the green bars are actual homes that are for sale. You can see there's quite a bit of inventory at 400 to 500. You can see that the inventory, the green bars, is way above the orange and the red bars, which is actually the market absorbing the inventory, whereas down at the lower end, 300 to 450, there's more parity in terms of what the market's absorbing versus what is available. So in summary, what I think is going to happen is I think that pricing is going to start going up again. I think that we have less inventory because you have, still 75% of America sitting on interest rates that are less than 4%. So there has to be a compelling reason for them to move. So we're going to have less inventory that's coming for sale. With interest rates dropping, I don't see interest rates going anywhere this year. I think they're going to stay in the mid to low sixes. With an election year, the current administration is not going to want to do anything to jeopardize housing health because it will hurt their election or their electability. So I think that we're going to start to see more multiple offers crop up again. I think we'll see pricing creep up again. And that's what I think is going on. So give me a shout if you have any questions or have any real estate needs, and we'll see you next month.